Good morning, everybody. Welcome to the Flow Show. It is NFP Day. Strange to say that on a Tuesday, but this is where we're at. And so it could be fun and games later on this afternoon as we get ready for that number. Morning, Kay. You all ready?
Morning, Ryan. Morning, everybody. Ready as can be, mate. Yeah, bring it on.
Yep, exactly. Let's see what that number is going to bring us later. Right, let's get through all the other bits and bobs because there's been plenty of data out this morning. Starting off over in Australia, where we've had the PMIs out, flash numbers coming out from around the globe, and better numbers for manufacturing, but not so great for services. So one up, one down. We also had a couple of other Aussie banks now looking for two hikes next year, NAB and Commonwealth. Both seeing two hikes next year. So that hawkish snowball continues to roll. Over in Japan, we've had the PMIs out there as well. Manufacturing went up higher than expected at 49.7, up over last month, but similar to Australia, services went the other way, 52.5 from 53.2. So one still in contraction, close to that expansion line, but services stay in expansion. Moving on to the UK and jobs data, which was a little bit mixed. It's still soft numbers. Unemployment rate went up to 5.1% as expected. There was a jump in the claims, but not as much as expected. The prior month was up, but it got revised down, so that was better as well. Pretty much the main news, though, came in the wages, which are still looking pretty hot. As you can see there, ex-bonus wages, including bonus wages, coming in at 4.7. There was an upward revision to that. Ex-bonus also coming in at 4.6%. Now, the big issue at the moment in wages is there's a huge chasm between public sector and private sector wages. Public sector wages coming in at 7.6%. That's all people like the NHS who had these big bumper pay rises coming through. Private sector wages are running at 3.9%, which is a little bit on the soft side. The reason that's important is public sector wages are paid for by the government. So they're seeing exponential wage growth, which is obviously impacting directly on government finances. So usually it's the other way around. The private sector pick that up. So that's not good news for the finances of the UK. But otherwise, jobs market, as I say, not falling off a cliff, but it is still looking soft and looks like there's no willingness or ability for that to change tack for the moment. On to the rest of the PMIs. Over in France, they saw manufacturing moving into expansion, 50.6. But similar scenes, services went the other way. That dropped to 50.2 from 51.4 previously. Germany, they saw a soggy manufacturing number, 47.7, and again, a softer services number, 52.6. Italy as well, they had some inflation data out. This is all sort of final numbers. HICP unchanged 1.1%. CPI, though, came down a pip to 1.1% as well. Eurozone PMIs pretty much reflecting what we saw out of Germany and the rest. UK, those numbers were better. Manufacturing moved further into expansion, 51.2. Services improved as well to 52.1. So that was good news. That's put a little bit of a lift in the pound this morning, where things could have been worse. So we'll see how long that lasts. Over in Germany, or back to Germany again, we had their zoo numbers as well, with current conditions looking worse, -81, though expectations 45.8, so a bit of an improvement there. Also, the Eurozone zoo number as well improving to 33.7, so a little bit better over there. But as far as these green shoots go, they're looking less and less green, dying off at a rapid rate, particularly in Germany. Good news for the UK. Starmer's much celebrated tech deal with the US that he got in September when Trump came over has been put on hold, with the US blaming the UK's slow progress. So there was some 31 billion in tech deals being done as part of that deal, but that's now all on hold. So you won't hear much about that in the press, or from Starmer himself after he celebrated that deal. But yeah, it's another win for the UK. Kay, just looking at all that data, not much for the market to get its teeth into, but as I say, the quids probably reacted the most out of all that.
Yeah, absolutely. Kind of could have been worse. Is the overall feeling, right? Not as bad as feared, perhaps. Markets likely still a bit short sterling, maybe via euro sterling. That needs to be adjusted, and yeah, that's where the sterling got its mojo from. So yeah, I'd say I don't know, it could continue for a little while. And I would say it's especially maybe euro sterling, right? Because the rest of the dollars don't do much right now. Actually, versus some even a little bit better bit, but it's mainly euro sterling that has rejected that 90 figure again. And yeah, that is now becoming a reasonable hurdle. A couple of attempts at 88 in start of December, and then another one last week, and today again we opened our day above 87.90, and we're trading back down to 87.60. So yeah, it's really euro sterling doing the work. I'd say more than really cable, right?
Yeah, no, yeah, but cable is having a little bit of a lift up,
Yeah.
which is fairly decent for cable anyway. So it has come, up 50 pips, where perhaps euro dollar is not done an awful lot in comparison. So yeah, just a bit of a speed move more than anything. But yeah, for once the UK is outshining Europe, though both lights are pretty dim, shall we say. So yeah, not much to write home about from either. But markets are going to move anyway. Right, coming back to some data from yesterday, there wasn't an awful lot out. We had Canadian CPI, which came in a little bit mixed. CPI came in unchanged, was expected to go up, but the core numbers remained sticky, around about 2.9%. So not really much for the Bank of Canada to get their teeth stuck into. It's still sticky inflation. There's nothing for them to change rates about at all. We also had the Empire State Manufacturing, which was expected to come in a positive number. That went negative again. This one's a bit of a flip-flopper at the moment. We also had a bit later on the NAHB Housing Market Index coming in as expected at 39, up from a prior 38. A few Fed heads out again yesterday. Fed's Mirren said shelter inflation failing to decline might change the outlook for inflation overall. He's not seeing evidence of concern in inflation expectations data, though some other members have had said that inflation is a bit of an issue for firms and consumers in their regions, but he's not seeing it in the data anyway. He says renewal of Treasury bill purchases are not QE. So I'm glad he got that warning out for anyone else who keeps calling it QE. Says we'll continue to transfer some risk to private markets. He says he'd be delighted to vote in favour of reappointing current Reserve Bank governors, saying they're doing a good job. Fitzwilliams, he repeating these comments pretty much, says largely sees one-off impacts from tariffs in 2026. And he says a rate cut means policy is well positioned into next year. The data shows that labour demand softened more than supply. It's saying that downside employment risks rose in recent months, but that inflation remains too high. Fed Collins says she supported a Fed rate cut, but it was a close call. She said she supported a rate cut amid a shifting balance of risks. sees future inflation risks as lower than they were. Bit more on this Hassett stuff, not apparently, or has been moving from the top spot in markets expectations. According to CNBC sources, people close to Trump had a bit of a pushback. High-level people, they're calling it, had a bit of a pushback against Hassett taking it over at the Fed. So it looks like Walsh might be in the frame, leapfrogging over Hassett there. But we know it's those two, and the market not really trading anything around that anymore. Negotiations are ongoing in Ukraine, Europe, between all the parties, US and everyone. There's more talks. So there have been talks today. Chancellor Merz says the possibility of a Ukraine ceasefire is conceivable for the first time since the war started. At the moment, they're still discussing the same things: territory, security guarantees, and the like. And Zelensky's been out in the wires not too long ago as well. Right, on to other news. Treasury Secretary Bessent apparently wants to end congressional stock trading. That's all your Nancy Pelosi's and all that mob who like to play in the markets. He says he wants that to come to an end. Don't know what that will do with stock markets if that happens, but good luck trying to get that through anyway. And good old Mr. Trump, he's apparently going to file, or has filed, a lawsuit against the BBC, which is a bit of a thing that happened over here, where they were a bit naughty in presenting the January 6th speech for Mr. Trump. They cut it up and chopped it up to make it sound far worse than he actually spoke. So apparently he's going to be suing them for $10 billion. I don't know how that's going to go out, but that's giving a few grins over here in the UK. And that's it on the news front. Oh, no, I missed one. In Japan, it's been agreed, or Kyodo reporting, that the draft budget is going to be over 120 trillion yen for fiscal year 2026. So that's a number we're looking at for that one. And that's all I've got anyway. Anything else, Kate?
No, I think we covered everything that there is to cover, mate, today.
Yeah, so I wonder what everyone's going to do. Is there a Pelosi ETF?
I'm quite worried for the U.S. Equity markets if the officials can't trade it anymore. I should. It's going to take very big beats out of it. No.
Yeah, certainly. But as I said, good luck in getting that passed. No one's going to fold to that one. Probably Mr. Trump himself is probably one of the biggest traders anyway. He's always dabbling in this, that, and the other. But anyway, we'll see what happens with that. Right, let's have a look at what's coming up. We've got the NFP, as mentioned. Now, we are expecting, depending on what calendar you're looking at, this one didn't have an expectation yesterday, but it's got one now, 40k, 50k I'm seeing elsewhere. Now, again, it could be a bit of a messy one because we're getting, I don't know how it's going to drop, but we're getting November's numbers and we're getting October NFP. Now, the October NFP number won't come with any of the household survey data. That's unemployment rate, participation rate, or any of that guff. That's all been pretty much done for the November number. So it probably doesn't matter what the October number is, unless it's a big outlier, and then you can judge how big the November is against it. For example, if October lost 500,000 jobs and this month it gains 100,000 jobs, you can look at it on net balance, that there has been a big amount of jobs lost. So it's going to have a say, the October number, and it's not going to have a say. If we get numbers in and around expected, and there's nothing, well, some expectations for a minus 40, 50,000 for the October number. So if it's on and around expectations, then the market will probably ignore the October number and concentrate on the November number. As I say, if it's a big outlier in October, and we have to see if any of those government jobs are falling into that, then it could just cause a little bit of volatility. So overall, as far as trading it goes, I think we've got to look at it from the perspective, if it's not a huge number, If it's on and around expectations, give or take 50k either side, I don't think the market's going to pay too much attention to it. But keep an eye, as always, on the unemployment rate. That's probably going to be the more important number to watch now, in case that shoots up or even drops back down again. Keep an eye on wages as well. We've also got retail sales dropping too, and some housing data. So there's going to be a lot to decipher all at 1:30. And we get the ADP before then as well. But this will be the weekly number, not the monthly number, because we're still all screwed up. Kate, how are you going to judge this one?
First of all, I have a question for you. Because you did the NFP comp,
Yeah.
what number are you going to use to judge the winners of the competition? Is it solely the November number, or are you going to combine the both together?
No, it's going to be the November number.
Voila.
And
So for all our listeners, those who were not on the Flow Show, you missed it. You won't know how Ryan will judge you, right? Um, Secondly, the funny thing yesterday was that BLS already came out that the margin of error may be bigger for the October number. So
yeah,
uh, what I would tell traders, first of all, who are tuning into us, don't judge the number close to the 1,000 or even 5 or 10,000 because the combination between both could end up being showing a very distorted number. So as Ryan already mentioned, October could be a real old mess. So perhaps the market will take the combination of both, but I might think that they would rather look at the November numbers. So that is kind of my thinking. Although, yeah, if that October number shows a real mess or real negative number, it will have an impact. So it's going to be a bit of a strange one to trade. Maybe we should just concentrate somewhere. I mean, just concentrate on the unemployment rates, right? The headline unemployment rate, the U6 one. Maybe that's in the end going to tell us whether any move that we see today is viable or not. Retail sales, obviously, the consumer is always important. But if we get a zero point 0.2, 0.3, whatever, that's not going to change anything. We need to see numbers plus minus 1% and above to really get things on the move. So I'd say let the algos kill themselves first, and then maybe look at the unemployment rate, because that in the end is probably what is going to trigger a potential next decision of the FOMC.
Yep, absolutely. And your best bet is to make sure you're on the Face Show later, where we'll be covering, obviously, the NFP live, and we'll have a quick reaction as to what's good, what's bad, what's not, what's neutral. So we're all going to be in the same boat. We're all going to be watching the numbers, seeing what drops, and then assessing it, because obviously that unemployment rate could be affected by the participation rate. So that's something we need to keep an eye on as well. So yeah, going to be a messy time, particularly with all the other data coming in as well. And then a little later on, we got the S&P Global Manufacturing and Services PMI as well, and a couple of other bits and bobs too. And we also get Mr. Stiffers speaking from the Bank of Canada a bit later, so you might have something to say about that inflation number yesterday. Right, let's move on from that, see what's going on. I mean, euro dollar, so I might as well stay there. And once again, not doing an awful lot. We've got very, very tight ranges going on. I mean, look, this is going back to last week, last Thursday, 23s to 60s, near 70s. So you're talking a 50 pip range. Now we are turning around this level here, 177, 45, 40, 50s, whatever you want to call it, around this fib. Just trying to make a decision above it. We couldn't get above and hold it. Even to here, we were still struggling now. Just yesterday. Today we're just holding this level, but it needs to push on. I've got a level 117.80s just above there, coming across these two highs and a bit of traffic in the middle there. So that obviously comes in just shy of the 118 level. If we are motoring through that, then 118.20s is another fairly decent level up there. And then we're looking at up towards these prior highs. Downside, we've been limited back to this 2030s zone down here, but not going an awful rate of pace at the moment. Vol is still ticking up a little bit. The 1 month at just under 5.5%, which is still low, but it was heading under 5% last week, so that's ticked up a little bit. Just shows there's a bit more perhaps going on in the market as this is the last big trading week. One other pair I was looking at, dollar CAD, which another one that looks a bit glued at the moment, just around this 61.8 fib. Can't decide which way he wants to sit on. There's a bit of a level there as well. No movement after that CPI data yesterday, so I'm still eyeing this support level here, or potential support level here, 20s, 35s, this triple bottom. If we get down there over NFP and we're not getting through, then I might think about a bit of a long, depending on what the numbers are. But I think if we haven't broken this, or if we have and we can't hold a break over the NFP, then there's maybe a chance that we see a bit of a bottom forming if we haven't seen one already down towards the 40s. So that's one I'm definitely keeping an eye on. And euro sterling, that's on the slippy slide. We're just touching the bottom of the zone again, but there's a little bit of a level under that we had previously. Well, it's all the way from here down to 50s, 40s. You can even call it down to 30s. So this another little zone, if you want to call it that, just around here. If we keep creeping lower, whether it's got enough in a tank to go and have another look at 87.20, I'm not so sure. But if it does, and there's not much other news coming, if it's just a speed move, I'm going to look to add back to some longs I took last week off this level, which I've been slicing and dicing on the way up. So that's a couple of things I'm going to be looking at anyway. Kay, going to bounce it over.
Yeah. So since Ryan just spoke about euro sterling, let's look at what's going on in the cable. So seeing a bit of short covering there, or let me just go maybe on the shorter time frame, right? Yeah. So the sterling is doing better. And again, if you look at euro sterling and you look at the euro dollar, it's really sterling doing the move, euro sterling coming down. So cable is bid, but we are getting closer to a half decent level here, which is the 61.8 of the move lower that we saw from September into the end of October. So that's really around 134.5. It's also been a level that has been attracting interest in the past. So that's going to be the one to watch this afternoon. If we can get over 134.5 on weaker jobs in out of the US and hold it, we're probably going to continue that rally for a little bit. And I would say, yes, we can always take prior highs, 134.90, 135.30, which has shown up a couple of times as well. But if we break through here, it's going to look relatively positive, I would say. But of course, all right. So this is going to be my level that I'm going to watch post data out of the US here. On the other side, 133.30. It's kind of funny because depending on which currency that we look at or which pair that we look at, like for instance, sterling now is doing better. So a mildly decent report or very mild beat without unemployment rate doing too much in the US could see a bit of a move back down, but then finding bids anywhere between, let's say, 133.65 and 133.30 if the dollar is bought, and cable going higher, as where if you look at another pair, This is a wider one, okay? This is the daily. Let me go on a bit of a slower one. This looks a bit different, even though dollar has also been coming down. There's the dollar yen. Dollar has also been coming down. If you look at the yen crosses, where the sterling crosses are supportive for sterling right now, the yen crosses are okay. They are a little bit lower than last week, but they're not really doing much. So this is one where I would be looking at the other side. If the US jobs report is a beat, we could actually get back above 155, call it 30, 40 or so, and go to the other side. So that again shows that maybe the way that we could look differently at different pairs for different outcomes in the US. Obviously, if it's a really, really bad report and you look at it, and the dollar is getting hammered, we're going to be looking at anywhere between 153 three quarters, maybe even 153.15 here before this move is over. But that's going to be the dollar obviously deciding on a really bad report. And then I would say, as we said earlier in the show, look at where that unemployment rate really is, because if it ticks up above 4.5%, FOMC is not going to like it. So even there, compared to where the NFP um, would show a bigger variation, relatively smaller variation on the unemployment rate may already be enough, positive or negative dollars. I'm really I'm really in the middle of I don't know how it's going to come out. How about you, Ryan? Do you know, or do you think something on this number? How it could come out?
No, I don't. Long
No,
story
I
short.
mean it's a complete coin cost, right? This this
Yeah.
this one. Yeah, we could see those government numbers show up, etc. But then we already hear the commentator saying, yes, but we knew about those government numbers, so maybe it's not as bad if you look through those. But it's a real coin toss today. So the main message here, I think, for I guess Ryan agrees, is that digest the numbers. It could if you look at dollar yen, we could be trading 156 or we could be trading 153 three quarters. There's going to be um, the market is probably going to trade it because it's okay. We got CPI tomorrow, but I still think that the jobs are more important than CPI right now. But it is a real coin toss. But yeah, I think that the dollar yen would be one that is slightly a better chance to keep going compared to cable, for instance. I'm not going to show too much more. Just be aware that the Aussie is not far from this 66 and a quarter, 66 and 66, 75, 85. That's really level. Those are the levels that need to break. Metals. I am slightly, should I say, disappointed? Not really, because I don't have a position in gold, but gold is clearly underperforming what silver is doing right now, and I think it's really that supply issue that we have still ongoing in silver that is keeping silver better bid than gold, which looks a little bit more just tentative, speculative. So on any decent number here, there may be a case for gold going under that 42.60 down to 42.45ish. So um, silver could find bids before gold actually would find bids and really turn around. Okay, unless the numbers are completely crap, of course, then all the metals should be on the fly. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Good stuff as always. Yeah, well, this jobs data is, we've said, it's going to be a complete mess. Government jobs and all that sort of stuff dropping in could affect it all. So much to look at. Hence why you should be on Face, where we'll be covering it live and we'll be able to dig into all the details.
One
So
one
yeah, we'll call that. Yeah, go on, mate.
Yeah, one last thing, and we don't really have to show it, but 6,800 on the S&P here, we're turning around a bit of a level. So there may be a bit of a decision also, and that's going to drive risk. There may be a bit of a decision here made on the S&P after the US numbers. So for our audience, I would say watch what's happening in the S&P, especially if the move gets legs and continues one or the other direction. It could drive risk quite a bit around as well this afternoon.
Yeah, and also keep an eye on them yields as well. 10 years up close to that 420 level once again. So, yep, we're seeing yields going one way and the dollar going the other way for once. Anyway, that's it for today. Thank you very much for joining us. Don't forget to take part in the FP competition. You can find that on Twitter. I'll put the link in the Zoom chat here. Have a great day, everybody, and we'll see you all tomorrow.